Good morning, everybody. Happy Tuesday. Welcome to the Energy Huddle. To some of our newer people, we do this every Tuesday at 9 a.m. on a Zoom call. We have different topics that we do every week. So make sure you guys are checking that out in the Facebook Connect group that we have. We post there. You've seen yesterday, I advertised for Matt being our speaker today. So just make sure you take a look at that. Couple of announcements. Making sure that you guys, if you have any CE, CE is coming up. That's going to be due if you are renewing your license for this year. If you have questions around that, make sure you check in with Francis or Jeremy, and they will absolutely help you with that. But we are counting down the days until license renewal for 2024 if you are eligible for that. So check on your CE credits. If not, there's a ton of classes out there that you can do on Zoom, or associations have, in-person classes. So check that out. Otherwise, just another general reminder to be looking at the Facebook Connect page for any kind of updates. Without further ado, I am going to go ahead and turn the floor over to Matt. I don't know, we had some people in the CE class. I know we have a few people that will be watching this back. Matt was at our last CE class with us and just gave us kind of a brief overview, but I'm going to turn the floor over to him. He's a great mortgage broker who can help you with all of your needs. So Matt, you can go ahead and unmute yourself, and I'm going to have you start off by telling us a little bit about you, your background, your family, all that good stuff, how you got into the industry, and then take it away from there.
Yeah, well, thank you for having me, Jill, and NRG. I appreciate you guys spending time with me this morning. No one really likes to hang out with me at 9 a.m. on Tuesday other than my kids and dogs, so you guys are part of a select group. Jill, do you want me to share my screen at this point?
Yeah, you can definitely do that. Yep, you're good to go.
If I can. And you can hear me okay,
There
I'm guessing then?
I can hear you okay. We can see your screen. You've got amazing sunshine coming in your window. I love it.
Yeah, thank you. Yeah, I'm working. Speaking of the kids are a little under the weather today, so I had to work from home in Lakeville. So it is sunny and beautiful today, but lawn care day, so it's a little noisy. Normally I'm in the office in Minnetonka, so I work for Edge Home Finance. Let me go to I'll go back to the kind of overview of what we're going over, but so this is me. I work for Edge Home Finance. I've sort of branded my stuff as Matt McGuire Mortgage because that's what people will Google me for, people will search me for. I encourage, everybody that's in our industries, real estate and mortgage, brand is everything, and brand will only get greater and greater. That's a topic that I'd love to touch on in some sort of thing I do with you guys, seminar, class, something. But branding is going to be really big in the future for all of us, as we try to set ourselves apart. For me from other mortgage professionals, you guys from other real estate professionals. But I work for Edge Home Finance. We're now the biggest broker in the country. One or two, depending on a couple different metrics that broker owners care about. I just love working there. I've been there for 8 years. I've been in mortgage for about 16 years overall. Half of that was with Wells Fargo, so completely different mortgage experience. And then, just some statistics, 300 plus loans closed. Not that you guys need to know or care about all that stuff. 65 5-star reviews on Google. That's what I try to lead with sometimes. If people are wanting to know anything about me, that's usually one of the things I try to tell them is don't listen to what I say, listen to what my customers say. And I try to provide them with the best experience, but quick, easy, knowledgeable, all that stuff. So at least that makes me feel great that at least 65 of them have gone online and told me I do a good job. So that's a little bit about me. I don't want to bore you guys too much. You guys know mortgage individuals, so I am in that realm. But I am a broker, and we'll talk a little bit about brokers and the difference between a broker and like a retail loan officer, which is probably what most of you are used to working with because that's 75% of the market. But that's a little bit about me personally. So I live in Lakeville. Our office, Edge Home Finance, is in Minnetonka, 494. I have a fiance. I have a dog, as I mentioned. I have a 5.5-year-old daughter, Whitney. I have a 2.5-year-old son, Isaac, and they were running around crazy on the hill outside my house last night, so they keep me busy. Griffey, my dog, he's about 7 years old, and he goes into the office with me at Edge. So if you guys ever come in and have a meeting with me, which I hope you do, because there's things we can go over that I'd love to share more. I can't really talk a ton about all this stuff. I'll try to spend more time on NAR today because I know you guys have wanted that and requested that. But there's other things like I would love to discuss the cost of buying versus waiting for a consumer, and I'll touch on that in a little bit in this presentation. But we could talk an hour about just that because people are sitting on low interest rates and they don't want to buy or they don't want to sell. So if you guys come into my office and talk to me about some of those things, you might meet Griffey, my dog. He's like a mini golden retriever, I guess is the best. He's mixed, but that's what he looks like. So that's a little bit about me. I'm a big sports fan. I try to golf once in a while. I'm a Patriots fan, football, Timberwolves basketball. So I am nervous for tonight, but hopeful. We need to bounce back. That's who I am, who is presenting for you today. So don't hesitate to reach out to me. I'd love to get to know all of you guys better, guys and girls. This is what I've kind of planned for us today to go over. I'll try to leave time for just freestyle Q&A and things that you guys might want more information on. But just went a little bit about myself so you know who I am. A little bit of update on the market because that's a popular topic. Waiting versus buying, which I just touched on. The NAR settlement, which we've been kind of planning to talk about. Then a little bit about brokers, like I mentioned, and then just some of the little things that I do that might be different than your average loan officer or mortgage broker. So let's get started with kind of the meat and potatoes, past my reviews. So the market, I won't spend a ton of time on this because we all kind of know and live this, but this is sort of where we're at right now. So every Thursday, there's a market survey that comes out. Freddie Mac does it. There's lots of different ways to look at an average interest rate. I would say this is actually lower than what a real average would be. But this is the Freddie Mac version. So 7.09% as of last Thursday. We know that interest rates have been elevated really for 2.5 years. And they were just at their highest point in 2024, basically a week ago. And I'll go back on the slide, but this was last week. This was Thursday. So mortgage rates decreased for the first time since March. And I think we had 5 weeks in a row where rates had ticked up. So that obviously impacts, let me mute my little computer. That obviously impacts all of the things that we do in my field and your field. I don't like to harp on interest rates because the media certainly does that. Our consumers will do that. And, these numbers can scare off a lot of people. I think there's math to be, if you talk to any older buyers that I have, they always tell me the joke of, I bought my first home at 10%, so these are nothing. And so I liked working with older buyers the last couple of years, especially because they don't blink at these interest rates. People my age, rates have been 4 or 5% for their whole adult life. So these rates are definitely higher. But we do expect the good news, and without me getting too far in the weeds on interest rates, the good news is that we do expect rates to go down. I know you guys have heard that, I'm sure, for a while. When that exactly happens, we don't know, but there's data that suggests that, we might see a little bit of relief here before the end of the year. And certainly next year is when I'm telling a lot of my clients, anybody that's buying this year, expect to be getting a call from me next year because we're probably going to be refinancing. So there's relief in sight. There's relief in the near future. I don't think it will be very far off. There are a couple of things that need to happen for rates to go down from where they are. And one thing I tell a lot of people is keep in mind too, I mean, if interest rates go down, even if we're saying the average interest rate is 709 right now, even if interest rates went to the low sixes, whether that would be later this year or early next year. That alone is going to cause a huge spike for you guys, especially me. I'm connected to it as well, so it helps me. But it's not like this 7 needs to go down to 4%. If 7.09 goes to 6.5, the media covers it. Buyers that have been waiting all of a sudden get super excited. They think, oh, rates are going down. Whereas a year ago, when rates were 6.5, everyone said they were too high. So it's the psychology of like, just like me, I said with my kids being sick. When I didn't have any kids, I thought I was tired in the morning. And now I wake up, I'm like, I'm not, that wasn't tired. Now I'm tired. So your expectations change as things change, but it won't take a big drop at all. So all of a sudden, you guys and girls and me to all of a sudden see an influx into the market. We already saw that this year a little bit where rates went down just a tiny bit, and all of a sudden people were like, "Oh, things are getting better," and then more buyers bubble to the surface. So rates will go down. The timeline is the question. So one thing that everyone is looking at now is this Fed rate cut. So the Fed doesn't directly impact mortgage rates. So they don't cut mortgage rates, they cut or raise the federal funds rate. And again, without getting too geeky on that stuff, that affects other rates in the financial industry, and they'll indirectly affect mortgage. So what we're waiting for is the Fed to cut the benchmark rate, the federal funds rate, which is the rate that banks borrow money from each other overnight. And once they do that, which right now the possibilities are July 31st or September 18th. Let me let Griffey out of the room. Sorry, well, I told you he works with me, so he's my coworker. Um, so July 31st, probably less likely. September 18th, it's possible the Fed could cut the benchmark rate, which should see a positive reaction within mortgage rates. Again, we do expect probably some movement by the end of the year, and then certainly next spring should be a really good spring for all of us in our industries. Um, and I
Yeah,
should say on
as
rates,
long
if
as
you,
you're touching on this subject, I
yeah,
just have a question in reference to where do you guide your clients to like what media they should be listening to? Because like right now, I even seen it this morning on my phone. There was something like, no, rates aren't going to go down until December. And I know I have clients coming back and saying that. So where do you guide them to look at this stuff?
I mean, it's gonna sound probably uh like a canned answer maybe, but I would say talking to someone like myself. Now it doesn't have to be me, but having customers plugged into, having a relationship with a mortgage professional, you guys having a relationship with a mortgage professional. And I'll touch on that a little bit later with brokers. I mean, when I say professional, I don't just mean a loan officer because as you guys know, you work with a lot of different loan officers. We're not all the same. So not every loan officer, I'm not tooting my own horn. I came up with this week and wanted to present to you guys, but not every loan officer can do a presentation like this because they don't know the market. There's a lot that can, and there's a lot that can do it better than me, but not every loan officer is going to be up on all of this stuff. So I'd say the closer you're connected to a loan officer you know and trust, whether that's me or somebody else, and then your customers then can also be talking to someone like myself. We can give them sort of the real information that we get from, I would say, services and resources that we know and trust within the mortgage industry. A lot of it we pay for, to know the insider information and the market data, and mortgage rates are up and down by this today, and there's a jobs report coming up on Friday, and this is what could impact it. So we're getting really the nitty gritty data, and not that you or your consumers are going to want to know any of that. I mean, it's its own financial course in itself, but just knowing kind of where things are going, and like Jill said, I think the high level overview is what are rates going to do, and even at that level, the media, it's really hard to get a. That's why that's a great question, but it's a complicated answer because the media has different goals than, and this isn't a political talk or anything, but um, the media with a lot of stories, they drive fear into us as consumers, because it drives ratings. So their motives are what, I would usually question. I don't think they're outright lying or anything like that, but you'll see things even within your guys' industry. I mean, you hear that from customers of, hey, home values are going down. And then if you actually dig into the data, it's like, no, home values aren't going down. Maybe this one median home in this market might have decreased a little bit, but home values are still in the 3, 4, 5% year over year range, which is the range that we've seen historically over 50, 60 years in home values. So the media likes to take headlines and run because that's what people react to. They get clicks, they get views. So it's really hard. That's a great question, Jill. I would just say, be plugged in with a mortgage professional that does dissect that information on a daily basis and can at least give their opinion on it. No one really knows, of course. If I knew what was going to happen, I wouldn't be a mortgage broker in Minnetonka. I would be, maybe sipping a pina colada in Costa Rica and then just predicting what the market's going to do and get it correct every time. But yeah, being plugged in and having that relationship, and that's where I'll talk about that a little bit with brokers. But there's really not a great media source, I'd say. CNBC and stuff like that isn't bad to follow on a high level, but you got to take their stuff with a grain of salt too. And I was gonna say too, the last thing I'll say on rates, really, if a big thing for people that like a customer or a real estate professional, if you don't want to get too geeky with it, which again I would recommend not doing. The biggest thing that we're waiting for right now for rates to drop is just inflation. So inflation has gone down. It's not exactly where federal government would like it to be. And once that happens, then we'll see mortgage rates go down. But all of this over the past 2 years, it's basically been all about inflation, which we all know because Chipotle burritos now are $10 instead of 8. So inflation affects all of us. So next thing I wanted to talk about, I'll keep this quick because this is something that I probably would spin into maybe a class with you guys or a buyer seller class, like a seminar that we can invite people to in a classroom setting, kind of like when I spoke at the CE class, but we can get in front of consumers. We can invite customers and just tell them, I can speak, I can have, other people speak, just about the cost of waiting. So this is a big problem other than interest rates, although this is connected to interest rates. This is one of the biggest battles that you guys as real estate agents face probably more than I do even. And that is customers waiting. They know interest rates are high. They've been high. So I think this is getting better because you can only wait for so long if you have one kid, if you have a second kid, if you have a new job, if you need to move at some point, you need to move. But you have a lot of people, and this is holding back sellers too, which is affecting your guys' inventory, and it's affecting a lot of different things in our industries. But people have 3.5% interest rates that they don't want to give up, and then there's other people, buyers that maybe they're renting, but they just see that interest rates are high, and so we have how many people we don't even know are just saying, yeah, I'll wait till interest rates go down and then I'll buy a home. The thing, and I'll get more in detail with this at a later thing. I'll probably set something up with Jill, but the basic math that I would like to teach you guys in the future is sharing with your consumer, not really telling them even what to do or because of course they're going to look at you and I and say, well, of course you want me to buy in May 2024. It helps you out. But if we're doing right by our consumer and we're sharing with them to say, hey, it's not only that, I'd love to help you and I'd love for you to buy a home. I mean, this is exactly what I tell people. And I try to defend you guys and try to spur up more activity to say, hey, if you historically, I had mentioned this earlier, home values go up about 4.5% every year. So if you buy a $300,000 home this year, historically averaged out, that's going to be worth 313,500 next year. So if I wait, I just missed out on $14,000 in equity. Not to mention, in the course of a year, you might have paid $5,000 off in principal, so you're actually almost more like 320, or I mean 320. That'd be a great return. $20,000 that you missed out on in equity. Like let's say if you're renting, or something else. Now the seller numbers on this are different, and that's a whole different thing that we can go over. A seller that's sitting on a low interest rate and doesn't necessarily want to move. But this is something that you can share with your consumers And if you guys ever want me to jump on the phone with the customer and explain to them some of this stuff in detail of equity, because it can get a little bit geeky again with numbers, but equity, what am I really missing out on? If the interest rate's higher now and then it's lower next year, what do those numbers look like? But I just remind people, so I was saying that's about $18,000 in equity. Um, Plus we can refinance next year. So we can always fix the rate next year if rate is the issue. But here's the big thing that will help and hurt people in the future is for every 1% drop in interest rate, 5 million new home buyers enter the market. They now qualify that couldn't before. Um, so you can imagine, and we went through this, and for those of you who have been realtors for years, in 2021, I mean, I had pre-approvals, stacks of pre-approvals that were sitting there because every home had 20 to 30 offers on it, and no one could get. I mean, it wasn't even that was our biggest hurdle. It wasn't interest rates. It wasn't any. Well, interest rates were actually great then, but it was no one could get a home. So it was like I could pre-approve someone, they could have the down payment, they could have perfect credit, but you were battling, 20, 30 other offers. So not that we will get necessarily back to that exactly, but when you flood the market, when I was talking about earlier, if interest rates went from 709 to 609, now you have a lot more competition. So sure, interest rates are lower, your payment's a little bit lower. In this example, this $300,000 example, their payment, if interest rates went down 1%, their payment would be $90 less a month. But that's if they were buying this same house. This same house with increased competition that they would see, that's going to cost next year the true value might be 313,500, but if you guys were realtors in 2021, that home probably sells for 330, 340 with multiple offers. So what did that cost you in waiting? Really only to save $90 a month that we can fix next year with a refinance. So again, there's a lot of math around this, but I think the big thing that I would say is just educating your consumer on, is it the best decision to wait? Now, for some people, it truly is. And that's where I don't love telling people what exactly to do, just arming them with information and math and just saying, hey, here's the pros and cons of waiting. There are some reasons where somebody could wait, but it's not as beneficial as people think. And when you consider the competition, that I don't know what it's going to look like, but I would be excited to be a realtor right now. I would be, even though it's been a rough couple of years for my industry and your industry. If you've survived up to this point and you're on this phone call, number one, congratulations, and I salute you. I salute myself. I'm still, in the business and making a living. But good times are coming because when rates drop, you guys are going to be so busy because we have a backlog of almost 3 years of people that have been waiting, having babies, switching jobs, normally would have bought a home, but have been waiting. And we already have an inventory issue, as you guys know. So we're gonna get really busy. There's been new builds still happening. Inventory is gonna be a question, but it's gonna get very busy for all of us, and that's good news. But again, that's why I would tell people honestly now, I would pay the $90 more a month now to get that home that I love, that I'm not going to have to overpay, $15,000 next year for, because everybody's, moving and active again because interest rates drop. So just something to keep in mind. Certainly reach out to me if you guys want some of the math behind this, and I can get with Jill and we can do a presentation a little bit more specifically on the waiting stuff, especially the longer that interest rates stay elevated. All right, so now we'll get to some of the more popular. Well, I guess the waiting is a big thing because that can get you guys business if there's people that have been waiting and you convince them to buy or show them the math and they decide to buy. But this has been a hot button topic, everywhere I go that has anything to do with my industry or your industry is the NAR settlement. So it has more to do with you guys than it does me, but because I am your referral partner and a resource to you, it does affect me in certain ways, but it affects you guys more. And I always, something like this, we've been through some of these changes in the mortgage industry multiple times over. So I do want to tell you guys that I understand the anxiety, the worry, the unknown, because especially when it's your job and your livelihood, that's big, that's scary. So I don't want to minimize any of that and say, oh, don't worry about it, everything's fine, kick your feet up. But I will say my overall message jumping into this would be that even though I just said it's not a big, don't say it's not a big deal. I think ultimately, and I'm certainly not the smartest person in the room, but I think ultimately we will look back on this and say, yeah, that wasn't that big of a deal. Like we made a big deal out of it on my side, on your side, but in the end, it was well, this first little bullet point I have, it was an evolution in the industry, but not a revolution. So again, this is similar to some of the stuff that I'd say we've gone through on the mortgage side. Somewhat recently, depending on how long you guys have been realtors, we went through TRID, which was a big change. That was kind of the opposite for you guys. It sort of affected you, but it much more affected us on the mortgage side. And in my world, everyone was freaking out about TRID, but now TRID is just really about disclosures and it's about the loan estimate and the closing disclosure. But now looking back on it, it's like eating breakfast. It's nothing that we do differently. And it was a positive change for consumers and for our industry. And I think that would be, if I can leave you guys with anything today, I would say that yeah, I think some things will change. Well, first of all, I would say that this settlement is still a proposed settlement. I guess we should start there. This has been proposed, but it hasn't been passed or ruled on by the judge yet. And that's coming up here, in mid-July. So this is still all in theory. This is still all speculative. None of this is final. Um, but I would say no matter what happens, I think that we're probably trending towards, it going through in one way or another. And there will be some changes for you guys and girls and some changes for me on my side, but we'll get through it together. And I think ultimately, like I said, next year it'll just be a part of, you guys have a buyer agreement. The MLS looks a little bit different, but you guys, conquer it like you do everything else. I mean, I tell people all the time, I could not be a real estate agent. You guys are smart, flexible. I mean, the things that you guys need to know and the ability to jump in a car when it's 30 degrees out or 10 degrees out in January and show someone a home and then know the ins and outs of the home and something that's going to affect someone's life for the next, for the rest of their life potentially. I mean, you guys do a great job at what you do. And this is, I think if anything, if we can even call it a road bump, which I wouldn't, I would say that, if there's an industry that I'm confident that can overcome it, it would be you guys. Realtors are resilient, and by nature, your job is hard. So this is just a change in what you do. But I don't think it's anything that's gonna ultimately, hurt you guys in any way that's going to be material to your business. So with that being said, also this is not legal or financial advice. I should give that disclaimer. I'm not a lawyer, I'm not an accountant, I'm not a finance person. This is information that I've picked up through my resources, doing my job every day and just trying to, spit out some information to you guys because there is, to my second bullet point here, there's a lot of uncertainty and misinformation. And again, the media, as Jill had mentioned, but just, my marketplace, your marketplace, there's a lot of fear and there's just a lot of misinformation that's just not correct. So some of that I wanted to at least summarize for the things that I've researched and looked at. But again, if you wanted more in-depth information, that would be more of a lawyer or, I'm sure the legal team at NRG, for the realtor associations and different things can provide guidance. Going back to some of the overview stuff. So I had mentioned it's currently proposed mid-July, a judge is going to rule on it. If the judge approved it in the way that it's set up currently, then there'd be some transitional period of what, you guys would have to start doing differently. This whole settlement started really about price fixing and steering specifically geared toward the MLS. So as you guys know, in your world, in my world, everything revolves around the MLS. Everything is, entered into there. Everything is spun out of there for listings and, really home buying all kind of starts from the MLS. So this whole settlement was brought about not necessarily because, individual agents were price fixing or steering, because you guys all do a great job. This is really just more about the system itself and just MLS, traditionally would list when a home is listed, it would list the the buyer agent compensation and commission, as you guys know. And that would be just automatic in MLS. And that's really what this was about. It's kind of that simple. It's just that they don't want, in any industry, antitrust, they don't want price fixing and steering. So on a high level, that's how this all started. And then now we're here to the point where it's gotten in front of a judge. So again, sort of high level stuff. If this proposed settlement went through, what does not change from what you guys do currently? Two big ones here. So it does not prohibit cooperative compensation. So what that is cooperative compensation is how you guys as buyers agents have been getting paid since you've been in the industry, but this is just the technical term for it. So it's where the seller's closing cost, them paying the seller's agent, pays you as the buyer's agent. And you guys are also list agents, so you obviously understand that part as well. But just the seller paying the buyer's agent, is called cooperative compensation. That is still allowed. The seller can still pay for the buyer's agent. So that's number one. That didn't change. That's how you guys have been doing business. That can still continue. It will look and sound a little bit different, but the good news is that will still be the same. And that's one of the bigger things that I would be concerned with if I were you guys. If that changed, that would be a big change, but that's not changing. That will remain the same. Also, this is something that I touched on in the CE class. What also does not change is that a buyer's agent commission compensation does not count toward the interested party contributions. So on a loan, did I put that on the next? Yeah, so I talked about this at the CE class. So on any loan that I do, there are interested party contribution limits and caps. So I'm not going to get too geeky on this one either, but for this one, for instance, this is a conventional loan. If someone's buying their primary residence, conventional loan, they're 10% down or less, they can only get 3% as interested party contribution. So that's defined a couple different ways, but most commonly it would be the seller. So if the seller's offering or agreeing to give the buyer 3% in closing costs and seller concessions, that can only be 3. And that's why you guys traditionally have seen 3 on a lot of your contracts and offers. Now, technically, you guys won't see many 6s and 9s. And a seller, isn't probably going to be willing to do that anyways, but the higher the down payment, the higher the cap goes up. And then you have the same sort of math for if it's an FHA loan, no matter what they put down, they technically can go up to 6%. VA, they can go up to 4%. USDA can also go up to 6%, like the FHA. So that's what interested party contributions are. You guys are used to it just with seller concessions for closing costs. But the worry when this first came out was that, okay, if this is the standard interested party contribution limit, 3%, let's say my buyer is putting down 5%. So we have a 3% cap on the seller concessions. Well, what if you as the buyer's agent want to make 2.75% or 3%? Are you going to eat up that whole cap because it's going to count towards this? So the great news is that, and this just came out a month ago from Fannie and Freddie, and FHA had touched on it before then, that a buyer's agent, no matter what happens with the settlement, the buyer's agent commission, if it's paid for by the seller still, which that's still allowed as we talked about, it will not count towards interested party contribution. So business as usual, we can do all of the same stuff that we've always been able to do. You guys aren't going to be capped where you'd run into a situation where your client would have to choose between paying you or getting a credit for closing costs, which that would be, again, if we're talking about things that to me would be very detrimental to you guys and girls as agents, these two things would have been much, much worse. The fact that the seller can still pay the buyer, or seller's agent can still pay the buyer's agent, and that it doesn't count towards interested party contributions. Those are huge wins for you guys and us because it means we're mostly still business as usual. So great news there. What does change? So MLS, again, if this goes through as proposed, on the MLS, it cannot list the buyer agent compensation. So you can't say, like you guys are used to, that the buyer's agent would receive 3% or 2% or 1%. It can't list it or call it out at all. It can't be in the notes. It can't be in the remarks. It can't be hidden anywhere. It can't be on the MLS. It just has to be a straight up listing. Now, again, why I don't think that's that big of a deal. MLS certainly makes it more convenient because you guys are on there all day, every day. But realtor websites can list buyer agent compensation being offered up. That is still currently allowed as is. Now, will that change someday? I don't know. But in the current form of if this goes through as is, realtor websites like an NRG website or an individual, you're a realtor website that you have your own branding, that could list buyer agent compensation on it. That's currently not prohibited or outlawed. It also can be discussed verbally. So if you have a listing for 6438 Irving Avenue South in Richfield, where I grew up, you could call that agent and say, hey, what are you guys? Now, I don't know the specifics on how you guys, the real estate behavior is going to go, but there isn't anything prohibiting you guys from calling that listing agent and saying, hey, what are you guys offering in a buyer's agent? Oh, standard, this and that. Okay, cool. And then that would be just business as usual as well. So one of the biggest changes with this is the MLS cannot list the compensation for you guys as buyers agents. And that's all designed again with this price fixing and steering in mind. They want open competition. They also want transparency. So they just don't want it to be automatic anymore where, hey, listing agent's going to get 3%, buyer's agent's going to get 275, whatever the split, that it's just assumed by all parties and then the buyers really just have no say in anything. That's really what this settlement is about. Now, it's not just automatic in the MLS, but it can still be on a website. It can still be discussed verbally. The other big change that you guys are, I'm sure, aware of, and this will probably be, I think, the bigger thing for you guys and maybe the bigger pain point is the buyer agent agreements up front. So, traditionally, I bought my first home. I was working at Wells Fargo, but I wasn't a mortgage broker yet. And the realtor that showed us our first home in Shakopee, we signed a buyer's agent agreement of some sort, right up front. That's more the representation one that you guys are used to and have lived by. So this is going to be similar, but a little bit different. So you guys, traditionally, a buyer's agreement is more along the lines of like, hey, you're working with me, you're not working with 5 agents at once, and you'll work with me for a certain period of time, and you guys can certainly break those if the customer wants. You're used to all of that stuff. This is going to be similar, but there's going to be more compensation and commission tied to this. And that's part of this settlement. So up front, there's going to be a defined compensation, a percentage or a dollar amount. So, hey, me as your buyer's agent, I'm going to get 2% or $5,000 or $10,000. I mean, it's similar to how I would say you guys already currently negotiate closing costs with the seller when we were talking about seller concessions. Like I can ask for $10,000 in closing costs. I can ask for 2%, 1%, 3%. It's negotiable. So it's similar to that. So up front, there'll be a defined compensation percentage or dollar amount. I would assume a lot of people would be doing percentages, but it could be a dollar amount. It can't be contingent on the seller. I'll touch on that in a second, but it can't say something like, 2% unless the seller gives you 3%, or it can't be contingent really on anything with the seller. It has to be an upfront defined compensation. So 2.5%, 2.75%, that's what you're paying me as your buyer's agent. Now, that can be paid for by the seller, as we talked about. But it just can't be, you have to enter that agreement where the buyer essentially is saying, I'm going to pay you, say it's 2%, I'm going to pay you 2% as, if I buy a home, they don't have to pay you 2%, obviously, if they don't. But I'm going to pay you 2% as my buyer's agent, whether or not the seller gives me a credit. Now, it can be in there. And this is where it gets a little murky. And I wanted to touch on this stuff with you guys just to give you more information. But I also don't want to get, I'm probably too far in the weeds already, but I don't want to get too far for you guys because some of this stuff can change. And again, I'm not a real estate agent. So much of this stuff is going to depend on the final ruling from the judge. And also a lot of this is going to be, how do you guys react as fellow real estate agents? Like how are you how is a seller's agent reacting to an offer? Are they just saying now all of a sudden, nope, all buyers agents on my listings are going to make 1%. But then does that make their listings less attractive? And then does that create a different competition problem, which this whole thing, if it's about price fixing and steering, then that could become an issue. So I think the people much smarter than me and you guys in your industry, I think the hope and the plan would be is as real estate agents, if you guys kind of stick together, and we have stuff like this on the mortgage side too, but if you guys kind of stick together as a team, and I know some of you would chuckle at that because you've had interactions where like you the last thing you feel like is a teammate with the listing agent or the buyer's agent. If anything, sometimes they feel like an enemy. But hopefully for the betterment of your entire industry, the behavior would be that people aren't undercutting people aren't doing anything shady that is affecting everyone as a whole. Because if you guys kind of keep operating as usual, the seller can still pay the buyer. It could still be the same amount that you guys have always made. The only difference is it can't be listed on the MLS and that you guys have a buyer agreement up front, but it can still be paid in all of the same way. So it'll be interesting to see how do buyers agents and listing agents react to this and how do they behave with each other. Um, but the buyer's agreement, I think, is the biggest change for you guys that there will be, and this again, this is hard for us really to speculate on now because, I can guarantee you if this goes through, then you're going to have, NRG is going to have a buyer's agent agreement. There's going to be one that's specific to the state of Minnesota and, maybe Keller Williams uses a different one, but there's going to be a standard form and format that you guys will use and you guys won't have to figure that part out individually. What you will have to do though is upfront meeting with your prospective buying clients, you have to define the compensation. And I think that that's going to be a little bit uncomfortable for you guys maybe in the beginning, but as long as you're educating buyers, and this is where I think, if you're on this call, I think you're spending an hour, if you're still listening to me, you're spending an hour, 42 minutes so far to get better at your job and what you do. So you guys are the agents that are going to be able to handle this and you're going to survive. This may potentially eliminate some of your, well, it will eliminate some of your competition because if you have, and some of you on this call probably fit into this category too. So I don't mean this disrespectfully, but it's kind of like in my industry, there's loan officers that keep their license and they just do it for friends and family and they do it here and there. And I know there's real estate agents that probably is even more so the case. But if anything, I think this will separate the great, good, very good, good, great real estate agents from just your average, not even part-time, but just your average agent that maybe isn't paying attention to everything, isn't implementing new ideas, isn't saying, okay, for the buyer's agreement, this is how I present it to my buyers. And they have no problem with it because I talk confidently. I can speak to the facts and I can speak to, the way the industry works. And every buyer's agent is going to have to do this. It's not just you guys at NRG and all of a sudden you're going to have some disadvantage. Every buyer's agent is going to have upfront agreements. So I would say don't worry right now too much about these specifics because we don't know exactly what those are going to be and what those forms are going to look like. But there's going to be some upfront agreement that all of your competitors are also going to have to work with. And that I believe, based off of everything that I've heard and seen, is that you guys will still kind of react as business as usual. So you'll have the agreement, but it'll still be paid by the seller and the percentages should still be the same. But that's something, to be determined because we don't know what that language is going to look like. And for us to guess at this point would probably be negligent, I would say, especially from a mortgage guy talking about it because I'm not even a lawyer or an attorney. So again, just kind of going back over some of the things, some of the biggest changes. The listing agent is no longer determining the buyer agent commission. Now the buyer and the buyer's agent are deciding and agreeing, but the percentages can be the same. It can still be paid by the seller. And I do want to touch on, I did say in the agreement, I didn't even want to put that in the presentation. I probably shouldn't have that. It's contingent on it can't be contingent on the seller paying because you can have an agreement. I've heard this example used from an attorney. You can have an agreement that says you're paying me 2% and it's going to be paid by the seller. If that's in the agreement up front, that can exist. It just can't be contingent on a seller paying it. Like, well, it's one, if the seller doesn't pay it because you're going to have to pay it out of pocket, But if the seller is willing to pay, well, then I want three. That's what is prohibited. It can't be that. It has to be it's either one or it's three. But it can say I want 3%, or I'm agreeing to represent you as the buyer, and you're going to pay me 3%, and we're going to get that from the seller. That can be in there. It just can't change and can't be contingent. So I know that's something you guys probably saw that and are like, well, wait, I thought you said the seller could pay it. So they can, and you can have that upfront in the agreement. It's just you guys can imagine the things we don't know. Where my brain goes is, well, what if a seller is not offering any? I don't, that's probably going to exist at some point. The seller, the listing agent goes rogue, the seller goes rogue. We're not paying the buyer's agent anything. Now, if you have an agreement that says you have to pay me 3%, and that seller is saying, I'm not paying a buyer's agent anything, whether that's found out through a discussion or on a realtor website or whatever, because it's not an MLS, as we learned, then what happens with that offer? That's the part that I don't know yet. Jill doesn't know yet. I would imagine that means, and this is where I don't think it's the biggest deal in the world, is that I have buyers every day. I just talked to one yesterday where they're pre-approved for FHA. All of the money they have in savings has to go to the down payment. So for them to buy a home, they want to buy a $300,000 home. Closing costs are probably $9,000, let's call it. They only have $10,000, and that's what's going to all go towards the down payment. So if they're going to get a house with me and the realtor we're working with, which I have to call him today and tell him, and he's an NRG agent, so he's going to love that one. If they're going to buy a home, I'm going to have to get 3% from the seller. That's just the way it is, because they only have money for the down payment. So I kind of look at some of this stuff where, is that the best thing in the world competitively? If you have you have an FHA deal and you have to get 3%, that's the only way. No, you're going to lose out on some homes because there's going to be some offers that beat you. And I think that's certainly going to happen in the new NAR world. But as you and I know, I see, as many deals as you guys see. I still have deals that have closing costs on them. Is it every deal? No, but there are deals right now today that I'm getting closing costs from the seller accepted. So it's not big and bad and the sky is falling. It's just it's going to change the way you move around a little bit and some of the competition. So anyways, I just wanted to touch on that. You can get paid by the seller, and same percentages you're used to and all of that. It's just going to look and sound a little different. I did kind of mention this. I think this opens up a lot of opportunity for good agents to market themselves, engage with their clients, educate their clients, set themselves apart from your average agent. And again, anybody that's on a call like this, I think you guys are in that bucket of being that you can set yourselves apart, because otherwise you'd be playing video games or something else right now, or taking a walk outside, but you're on this call getting better. I think there is an advantage to working for a company like National Realty Guild, where I think you might see, again, this is just my own speculation and 2 cents, but since you guys are on this call, I wanted to make you feel better that I think that a big, huge company, not that you guys are small, but like the Kellers, the Coldwells, the EXPs, there could be stuff that they're even harder on those companies, than they are you guys, because you could see a world where all of a sudden now, okay, this stuff can't be listed on MLS, but what about Keller, who has their own internal systems? It's not like none of us on this call are idiots. So like, if that information can still be disseminated through Coldwell or Keller, that like, hey, this house we're accepting 2% on, isn't that the same thing that we're steering with on the MLS? So I think they might get cracked down on more than you guys would. So I like the advantage of working for National Realty Guild and not being, I think, susceptible. And again, this is just a guess by me, but not being susceptible to some of the big brokerage might have to deal with, which that could be painful for them depending on what happens and how they deal with it. And some ending points here, I think that I want to make you guys feel good and tell you the rumors of the death of the buyer's agent have been greatly exaggerated, whether that's my industry, your industry, the media. I think things will mostly remain the same. I think it's just the MLS is going to look a little different. You guys are going to have to get used to doing the buyer agreement up front with compensation included. But just like with anything, you guys have hard conversations every day. So I would say don't sell yourselves short. Give yourselves credit. I mean, imagine when you have a listing and the buyers fall through at the final minute. Is that a fun phone call for you guys? No. If you have anything that you guys face, the challenges you guys face on a daily basis, with your deals. I mean, other than maybe a doctor delivering, I guess there's lots of professions that have to deliver bad news, including me. Sorry, your pre-approval didn't go through. But you guys have tough phone calls every day. This is, I think, even less than that. If we're scared about the buyer's agreement, you guys have tough conversations all the time with your peers, with other realtors, with your customers. And I would even call that a tough conversation. It's just a transparent one. And it's probably a good one to have, is that this is how I'm getting paid. This is what I'm getting paid. Nothing's a mystery anymore. I am Matt McGuire. I'm a great real estate agent. I have your best interest in mind, and I just want to be transparent and everything. Depending on how you present it, I think you guys will all be fine. And again, we'll look back on this and say, weeded out some of the agents that didn't know what they were doing, but the ones that did, especially when rates drop, are going to flourish. Um, and again, just educate your buyers, win more business, set yourselves apart from the other competition. Real quick, because I know we're kind of running out of time. How can I help you guys with NAR or a mortgage broker like myself? But I would love for it to be me if you guys want to give me a call or a text. I think it's really important to have a trusted partner, a loan officer like myself, and specifically a broker that knows what they're talking about, knows the interested party contribution limits memorized, follows all of this stuff on a daily basis and pays attention, that I can help you and we can navigate. Having that person that you can call at your fingertips, not having to wait till Monday morning at 9:30 when they park at Wells Fargo and roll in. Like, I work all weekend just like you guys do. So someone that you can text at 10 p.m. last night and say, hey, I got this funky deal, we're trying to do this. As things like NAR come out and your job gets a little bit more complicated with maybe an extra step or two, having someone on the other side like myself that you can trust, call, within 5 seconds and get answers, that's going to be really important, to have your guy or girl that you can trust. I think working with a mortgage broker is going to be even more important because some of the cost savings and the extra knowledge that we typically provide. And again, I talked about you guys investing in yourselves as agents and staying educated on this stuff so that you can talk with consumers about it. So here's real quick. This is not my dog, by the way. My dog, Griffey, is red and a little bigger than this guy. But why work with a mortgage broker? I mentioned it earlier, and then I also just touched on it with NAR. We save borrowers money. There's literal where we get wholesale pricing, and our mortgages from an interest rate standpoint and a closing cost fee standpoint are cheaper. And I'll show you in a second. So we save your borrowers money, or your client's money, our mutual client. We have multiple options. I have 120 lenders. I just did a land loan on Friday where they bought raw land in St. Michael. I do DSCR rental loans. We do all the product stuff that you guys probably hear on these Tuesday calls. As mortgage brokers, I can do really if it's a mortgage product in America, I can do it. So there's options for our clients, is the good news. And your average mortgage broker, I would say, is very knowledgeable. I don't have many people I work with that have been in mortgage less than 5 years even. Most people, if you're a broker, you're out on your own, you're working with multiple lenders, multiple systems. You have to really know mortgage inside and out, which is different than sitting at a real estate office, or it's different than sitting in a credit union where people apply for a debit card and then they come and apply with a mortgage with you. I'm building my own business out in the streets just like you guys are. I've been in mortgage 16 years, and I think your average mortgage broker, the experience level is higher, the knowledge is higher, which is good for you guys, and we're cheaper with more options. So again, I would say, why not? And this isn't just to toot my own horn. Again, this is just brokers as a whole, because I think you need to be working with a mortgage broker. It does your clients better, a better service overall, and it's better for you guys. So again, without harping on this too much, I don't think you guys need to be drilled into about a mortgage broker too much, but flexible and competitive. I could send you guys some slides of this if you want more information on the benefits of working with a mortgage broker, but here's just some high level stuff. This is the big one that I wanted to show you guys. So this was the last in-depth study. This is getting a little older now. The numbers are probably just a little higher now, so it probably would make me look even better if this was up to date. But this was done in 2021. So without getting, there's a lot of numbers on this screen, but the main one I want you guys to look at is, with all borrowers of all income levels, working with a mortgage broker saved them $9,400 for their loan. And some of that is upfront savings and origination, closing cost fees. and then some of it is interest rate savings. But imagine if with every one of your clients, you tell them, hey, I can save you $9,400. Is that something that you would be interested in? And that's what we do as mortgage brokers. That's not just me. Now, again, pricing and lenders and different things can change, but this is average stuff. So if I tell someone, hey, do you want to save $9,400 by working with me or somebody like me? Everybody's going to say yes. And this is what, if a client is going to Rocket Mortgage or a Wells Fargo, but even like a local, a Bell Bank or a Cross Country Mortgage or some of these retail operations, they're paying $9,400 more on average working with those groups by not working with a mortgage broker. So when we talk about NAR and we're talking about dollars and customers having a little bit more transparency to what they're spending, if we can save them $9,400 every time, by just you recommending they talk to me instead of a retail loan officer. And again, if you guys want more definition on that, let me know. But a mortgage broker, essentially, I didn't even really touch on that yet. A mortgage broker, I can just use multiple lenders. I'm not working for a lender. So when I worked at Wells Fargo, I worked for Wells Fargo. I offered Wells Fargo's rates, offered Wells Fargo's products. If Wells Fargo couldn't do it, I couldn't do it. If underwriting was taking 90 days, my underwriting was taking 90 days. As a broker, I can work with 120 different lenders. I'm shopping. I'm sure you guys are familiar with insurance brokerages. I could call State as a customer. I can call State Farm. I can call Progressive. I can call Geico, or I could have an insurance broker shop with all of them and tell me who's the best, and then I go with them to save money. Mortgage brokers, same concept. I can shop with 120 lenders to get your client the best deal, and that's how they get the $9,400 in savings. But it's savings, it's options, it's knowledge, and I think we're just a better resource for clients. Here's some of the things specific to me and maybe Edge Home Finance. One of the first things I told Jill is I'm education focused. That's the whole reason I'm on this call today. I would love to do more stuff with you guys in the future on NAR, on waiting versus buying, on first time home buyer stuff, on selling stuff. There's so much stuff that we can get into on educating consumers. And that's what I try to do. And that's what I think you guys should try to do as agents is if you're just asking for sales all the time and you're focused on transactions, although I think you do want to, have as many transactions as you can and make as much money as possible, but focus on education and educating consumers and the sales will follow. And that's what I try to focus on. I'm open to doing open houses with any and all of you guys, unless it's in Tennessee or parts of Wisconsin. It'll be a little tougher for me, but certainly Minnesota and Western Wisconsin I can do. I try to do an open house almost every weekend. So I try to get in front of consumers. I'm busy as is, but I think open houses are a great idea for just getting free leads and building relationships, which is what our industries are all about. Would love to do seminars with you guys, customer seminars, different things where we are educating. I did mention, there's a couple unique products that you guys hear about products a lot, but I just did a land loan last Friday. They're going to build this summer. We finance the land separately. Then we're going to do a construction loan. Then I'm going to do an end loan for them. But just know, as long as it's not a Pulte, Lennar, some huge builder, I can do these land and construction loans. And I've been getting a lot of traffic on that recently. So I just wanted to mention that because I've been told it's a little bit more unique that not everybody can do these. We also have a 1% down conventional program that's been pretty popular. I can do all of the down payment assistance stuff that you guys are used to, MHFA. Now they have a first generation home buyer. We can do those. Sometimes we might find a better option than those for the clients, but we certainly can do those at Edge. And then we are licensed in 45 states plus Washington, D.C. So if you guys have out of town clients that you need a good mortgage option on, I can do those for you, or my team can do those because we're licensed in all of those states. So that was a race to the finish line, but wanted to thank all of you guys for spending 58 minutes with me. I appreciate it. I know I'm without any interactive talk back and forth. It can be tough to listen to, but I wanted to cram as much information as possible, knowing that you guys can call me, you guys can text me. I'll put my contact information on the screen here. Reach out to me any time of day, night, weekend. I'm available. Might not be able to talk all the time, depending on what the kid's situation is, but I'll always text you back right away, just like my clients. But I wanted to cram as much information and not just talk about NAR, not just talk about waiting versus selling, but talk about kind of a smorgasbord of things. And then as I get to know you guys better and we do future calls and in-person stuff, you guys can talk to Jill and let her know what would you like more information on. I can present on that. But if you have any questions, if you have clients that need to get pre-approved, my phone number is always on for that as well. But I want to help you guys, educate you guys, build relationships. If you have questions, if you want to talk about the Timberwolves, if we win tonight, you can text me that too, but I'm around and available. So thank you guys for having me. And Jill, I can stick around. I don't know how you guys do this if
Yeah,
someone
no,
has
I know
questions.
there's a couple questions in here, and yeah, people can pop off if they need to and come back and watch it. So one of the questions in the chat is, should we expect more FHA and VA loans, expecting a percentage back in order to close?
Um, Meaning like for the, like this is touching on the NAR part of it. I guess you don't.
Let's see if Jacob, are you still on here? Yes, he is. Jacob, do you want to maybe unmute yourself and go into detail on that? If you can.
I mean, it could just be speaking to the, yeah, if we don't hear from Jacob. I mean, I would say that, no, I think high level, no, I don't think that FHA and VA, unless we're just thinking they would have less in reserves or less in assets, and then that would mean that potentially they, might need more assistance from the seller, whether that's NAR related or not, that's possible. But I would also
Okay.
say something like that has kind of always been there. Like I was talking about my FHA buyer earlier. They're going to need 3% in closing costs. So that's separate from NAR because obviously there's no change yet because it hasn't even been passed through. So I would say no. I mean, not anything different than we're already used to, just specifically from NAR. I think FHA and VA won't really have anything to do with it. It's just really more about what do those buyer agreements look like and what is the discussion with that specific listing agent like, not really the loan
Okay. Um, then the one question I got texted to me was wrapping in like a buyer's agent commission into a loan. If we need to be more careful about appraisals. Because obviously, if we're wrapping in closing costs, then we're wrapping in, the compensation to the buyer's agent. What do you think is going to happen with that?
Yeah, that's a really good question. And that's something that I've seen asked before when I've been, researching and looking at this stuff and been on presentations just so I can learn about it. It is a potential obstacle. Now, the thing I don't know though, and this is where I've heard this too from people. I always like to reiterate people smarter than me, where we don't necessarily know how those are going to be treated if they're going to be because right now, a listing agent pays for like the way that you guys are paid now as buyer's agents. I'm trying to think how to explain this on a high level. That's not changing, right? So if right now the listing agent is charging 6% to their seller, that's what they're getting paid, and then that's what they're paying the buyer's agent with. That doesn't affect an appraisal currently. Because it's now if there's closing costs involved and then the offer price is inflated because of that, that's a different story. Now we all know that needs to appraise. That can be an issue. All of us have dealt with that in time where, okay, if we're asking for 3%, like my example earlier, do we offer 300,000 and ask for 3%? Or do we offer 309 and ask for the same 3% and hope it appraises? That's always a risk that we take. What I'll be interested to see is I think it's going to be more like it is currently, where it's not looped into the price directly, which would be good news for all of us, so that it's a separate agreement between the seller and the buyer. So I almost would think of it like if you say, like when you guys write up a PA and you're like, leave the TV above the fireplace, or the refrigerator and like when you put those things, that's not affecting the loan at all. And actually, usually with personal property, I'll tell you guys leave that stuff out of the PA or just don't send me that page because the lender doesn't like that stuff. So I think if you're asking for my opinion and my guess, I think it will be more like that, where it'll be its separate own agreement where the seller is still paying 6%. The seller's agent is paying 3% to you guys as the buyer's agent, whatever that is set up and how that is it comes about. But that it would not affect the loan because I think that the powers that be, you could see really quickly where if you're adding in 3% here and 3% there, then yeah, that would become a real, very real scary thing. Well, now if everything's inflated by 6%, how the heck are we ever going to get accurate appraisals again? So I think it'll be, and that's what I've heard the most common. We don't know yet. That's the other part about this, but I think most common belief is that it will be a separate agreement and won't affect the loan, therefore not affecting an appraisal.
Yeah, it's gonna be interesting because I'm already seeing and we're gonna be going over buyer rep agreement again in a couple weeks, but on my buyer rep agreements, I'm writing 2.7 in and explaining to them what it is because you can't add on top of it. If it's
Yep.
2.7 and all of a sudden it comes back at 2.5, I'm fine. That's fine
Yep.
with me. But you can't increase it. So that's what I'm trying
Yep.
to tell a lot of agents is keep it at the 2.7 in those buyer rep agreements and then you negotiate it after the fact. But I am seeing on listings that I've been writing on buyer rep 1%. I've seen some zeros already. So there is, but again, even educating your clients exactly what you said, Matt. On my listings, I am educating my clients that we need those buyers agents.
Yep.
I do not typically bring the buyer to the table. It's usually, 95% are not dual agency. So it is. People are not calling anymore from signs. People are not, they are looking on the internet and then they have their own agent. So I think it just has to come back to that. But also what you had stated, how are we going to handle this as agents and how is this going to unfold? Because there are going to be some bad ones out there and there is going to be some people that are just, complying and going. So yeah, definitely. I know we've went over time. Does anybody have any other questions for Matt as long as we have him? We will definitely be including Matt in more calls and trainings coming up in the future. But does anybody have any other questions as long as we've got him on here?
And as you wait for the chat box, I can touch on that real quick too, because I think that's a really good point. And that's what part of what I was saying earlier is that the way that this settlement looks now, I think is not nearly as big and scary as it seems. The piece that we don't know, and I would try to reiterate that, is what Jill just said, is what really, it's not the courts, it's not buyers really that I would be most worried about. Unfortunately, it's you guys and your peers because it's like Jill just said. I mean, if I'm a listing agent, I just say, nope, I'm putting all my listings at zero because, screw the buyer's agent. Well, then that, you know, I just think that's going to have bad repercussions for those agents that do that. Like, is that cute on a one-off deal and they feel, good about it? Sure, maybe, but I think that it's not acting in the best the respect of everybody, including you guys as buyer's agents. So the thing is, most listing agents, you guys are also buyer's agents at times and vice versa. So if I'm screwing all the buyer's agents out, plus if I'm a listing agent, I'm doing everything at 0 or 1. If I'm the seller, I mean, you might be saving me money, but you might be costing me way more money because you take out 3/4 of the competition where the buyer's agents are like, no, we're not going to come, I'm not even getting paid on that deal. So now are you driving down the price that your seller can get while it's charging them in theory less? It's just a slippery slope. So that's the part we don't know is how you guys, how listing agents are going to react. The other part I was going to say to hype you guys up as well is that, so in my world, credit reports 3 years ago, credit reports were, I think, $29 through my credit company. So I pull all my credit reports for my clients. It's $29. I used to just eat that cost. I would just pull it, pay for it on my credit card. I'd get reimbursed at closing. And I still do that quite a bit. But in my industry now, credit reports with some companies are $90 for the client. I mean, I tripled in just like 3 years. I mean, again, we've talked about inflation, but it's at a percentage of inflation that's like, I don't know what these credit companies are doing, but they've done it and the consumer now pays more. So in my world, something similar that I thought of like the buyer's rep agreement that you guys will be a part of your life more now is to a lesser extent for me, but it's the credit report. So if I'm doing a pre-approval now versus 3 years ago, and again, I still will sometimes, especially if it's a referral from a real estate agent that I work with and stuff, I'm not gonna usually ask for a credit card and stuff like that. I'll just pay for it and get reimbursed. But I do know there are mortgage professionals like me that now they will not pull a credit report because it's so expensive without charging the borrower first. And I have had to have those conversations with a lot of my clients where if it's an online lead that I'm working with, or I don't really know them, or they're telling me I don't know what my credit's like. Well, I don't, you guys can imagine, I don't want to pull 10 credit reports at $90 a pop and get stuck with a $900 bill for loans that don't close. So I have to have those, you would think maybe it's an uncomfortable conversation because typically in mortgage, there's some companies that have done that, but most companies and most mortgage brokers always just footed the bill, got reimbursed at closing. Now we've had to ask for a credit card up front. You can imagine that's not the easiest conversation in the world, especially when you're just meeting someone like, hey, can I get a credit card to charge you $90 for a credit report? And it's like, hey, I'm just getting started here. I haven't even found a house. So I will tell you that when you speak with confidence and you just let the client know, because I was a little worried about that, although I used to have to collect money for Wells Fargo and I'm used to that sort of thing. But there was a little part of me that's like, man, I don't want to ask people for credit card information. But the second I just started doing it, making it more a regular part of my routine, that like, yeah, the last step of the pre-approval is I need to pull your credit report to see where the scores are at and see what you're paying in monthly obligations. It's $90. I'm going to send you a link, put that on a debit or credit card, and then that's the last step. And then I'll let your agent know that we're good to go and you can start shopping. And when I've presented it like that, just matter of fact, confidently, this is the way it works. I have had, maybe one time ever where someone was like, well, that's weird. I don't usually get charged upfront for my credit report. But they don't know. They just know what you kind of tell them. And I think what Jill said, I wanted to bring that back. That's why I didn't want to just let you guys go on this call, is to say that's an excellent point by Jill, is that if it's just like, here's the buyer's agreement, 2.7, this way it's always worked, this way it currently works, it's paid by the seller, whatever the language is, the buyers are just going to say, I mean, there's going to be some that have questions. We all know that. There's one-offs and everything, but the vast, vast majority of your buyers are just going to say, okay. I mean, I can't tell you how many closings that I'm at, like with you guys, where they don't understand. I mean, the amortization schedules, escrow schedules, late. I mean, you guys see they're signing 100 pages. I'm sitting there as the mortgage guy at my closing. I know all the stuff because I've been in mortgage forever, but so I sort of welcome those questions. But think about all the things a borrower signs at closing that I mean, it's sad when you think about it that way, but they literally have no idea what any of it means and they're just signing. So you guys, and I'm not saying you're pulling the wool over their eyes. It's just like Jill said, it's just being confident, matter of fact, this is the way it works. If they challenge it, you guys can have a discussion, but 9 out of 10 buyers are just going to say, okay, sounds good. I know you're working a lot and you're working hard for me, Jill. I appreciate it. So I'd be happy to sign that for you. I think that's how most of your interactions go. And if a client's going to give you a lot of guff about it, and maybe that's not the right fit for you, but you're going to get 9 other of the next 10 that are fine with it. So like I said, in the end, my overall message is you guys will be fine. It will be fine. It's a little bit of an extra step, but you guys will get good at it like everything else.
It's interesting that you say that, Matt, because I was at a closing last week and it was a buyer that I was working with, and they came back to me and they're like, we didn't see that we paid you and we want to make sure you're getting paid because you did a really good job for us. And I was like, oh no, yeah, you don't need to worry about that because the seller is actually paying me. And so again, if you show them the value of what you're doing, they are concerned about you just as much as the whole entire process. So there was one question in here and then I will let everybody go because I know we've got time is precious. Pam asked, why do we do 2.7% for buyers rather than 3 or 3.2 if we shouldn't be price fixing? Pam, you can do whatever percentage that you want to do in that buyer rep agreement. I'm just going off of buyer compensation that we're seeing out in the market. 2.7 is pretty high for what I'm seeing out there for buyers compensation. Seeing a lot of 2.5, seeing a lot of 2s, 2.22, like all of that. So I just always go with 2.7. because again, that's kind of what the standard was, that we kind of set as agents. But if you want to do 3 or 3.2, you can by all means put whatever percentage you want in there. NRG does not limit us on that. Some brokerages do. So that's a decision that you're going to have to make. But I'm just going with what standard is out there for right now.
So
So
first of all, I'd just like to say thanks, Matt. Thanks, Jill. I appreciate everything that you guys have gone over and that format and everything. But I'd also like to bring just a question out there to everybody and know if there's a group of people that are out there that would really like to do more of a training on, using things that I like to go a little bit outside the comfort zone box. You guys are really going into that comfort zone. I believe that that's a very important area that needs to be addressed. But I also believe I like to go into those hard conversations myself before I'm in one. So I know what I'm going to say while I'm in it, and to streamline it to the smallest portion possible. Because I know that the what I don't want to do is see the deer in the headlights look from the other person, because it really shows two things, and I don't think many people realize this. But being in sales for a long time, I've seen the deer in the headlights look that you can tell somebody about anything and they're going to nod and agree with it and go with it, and that'd be great if you're a truthful person and everything else. But the fact is, there's some probably very unscrupulous people out there that if they get the deer in the headlights look, they'll tell the person what they want, the person will sign, and things won't be going good, if that makes sense. But I guess some of the hard conversations I look at are um, so in real estate, you can charge whatever you want. You can go as low as you want and as high as you want. I've done the 8% listing. I've also done a 1% for both the buy and the sell side on the transaction, where I represented both parties for 1% total. That's 0.5 each person. So I like the fact that I can say I'm not at 8%, and I can do any of those portions and use those extremes as the example. The thing that bothers me is that, for instance, just going into Matt's thing a little bit, it's great that a lawyer says that I can write that I'm charging 3% and that'll be charged to the seller. So what happens in that? I guess it's asking a lawyer portion of this. What happens when the sellers are not going to pay me that 3%? Does that void the whole contract? Because I've stated in there that the sellers are going to pay me. So does that mean that what I wrote doesn't, because they say that you can't renegotiate after the buyer's agreement, and that's where I have a lot of hard questions to where, like I said, I appreciate Matt doing the mortgage thing and all that. I appreciate all that, but I have a lot of those hard questions that I'd really, because for me, I want to go into the hard questions, because to me, the easy questions, I can work through those pretty easy. It's the hard questions of what if you do the things that are being supplied to us as areas that we can do it, we can write that in there. But what if in the end you're having to break away from that contract that you wrote? What happens then? So it's my hard questions that, I just want the answers to, because it's like, who wants to get a buyer's agreement with somebody and ultimately you showed them 20 houses, and the house that they are writing on, the seller won't pay you what you need, or, oh, okay, so they agree to 0.5% and it's, just ridiculous. You're not going to do the work for it. And the buyer saying, well, I can't buy the house and pay you. I can't do both. So can we end this contract so I can buy the house? I mean, where are we at in those type of conversations? That's where, I'm just looking for the hard conversations, get a pool of us together, or am I the only one that wants that? So that's my question to everyone.
Thank you, Dennis. And I will, a couple weeks from now, we are, obviously going to go over that buyer rep agreement again. And we did go over it previously about a month ago. So if anybody wants to watch that back with one of our top agents, I will also make sure that Randy is on that call because he almost needs to address that as our broker. And I also know there was a comment in the chat that people are very confused now about the conversations that we've had. So I think the biggest thing is going over that buyer rep agreement. And like you said, Dennis, it's having hard conversations because sometimes you do have to have those hard conversations. So I will definitely say we will work on that. I'm probably going to end up calling you, Dennis, to go over some questions that you might have so we can kind of address those for everybody. I think that the questions that are coming up is something we definitely have to have Randy answer. So Susan, I know you put that in the chat. That again is not, I'm not a broker. I don't want to be a broker. And so we're going to have Randy answer those questions. And I know he's not on here today. So what I would advise is any of the questions that you guys have, direct them to me, and I will definitely try and get the answers to them and get that on that call that we have in a couple weeks and see. But I would also advise you to go back to that buyer rep that we had went over with Liz Reynolds. And again, she is one of our top agents and she explained it in there very, very well. So definitely watch that back. But we are short on time here. I know we went over and I appreciate everybody staying on and everybody who's going to watch this back. Again, Matt, thank you so much for your time. We are going to be doing more stuff with you. If there's any questions, please reach out to Matt. He can definitely help you on that mortgage side. And again, we're going to be doing a lot more stuff. So thank you for your time today. And you've got everybody's contact information and we'll go from there.
Thanks, Jill. Thanks, Matt. Great
Right.
meeting
Thank
you
you,
guys.
Thanks, everyone.
Thanks a lot.
Thank you.
Thank you. Thank you.